You ask. I've heard from some people that Poland is the holdout in Europe, and with one no vote, the whole thing can be vetoed, meaning the EU does not sign up on this sort of landmark deal. But it seems like the concessions that they want are manageable. But look, even if Janet Yellen wins 140 countries, consensus to sign on to this deal, she still has to get support from Congress, and she doesn't have deep ties over there.
Yeah, what I found so interesting about this is, the political aspect of this too, and to what extent voters actually care about something like this, Saleha, just in the last 30 seconds we have with you.
No, this is not a kitchen table issue. They don't care about corporate tax rates,
right.
especially when they see gas prices and the price of burger meat going up sky high.
Yeah, so as far as Democrats in November, no matter what she does on that front, it's not necessarily going to be a win, at least politically, for Democrats. Again, just a fantastic piece written by Saleha Mosin and team. Janet Yellen is getting trapped in the blame game over inflation. Saleha is senior Washington correspondent for Bloomberg News. Be sure to check out this story. It's featured in the current issue of Businessweek magazine. It's available on newsstands, on the Bloomberg terminal, and at bloomberg.com/businessweek. Our thanks also to Joel Weber. He is the editor of Bloomberg Businessweek. You heard him live here from the Bloomberg Interactive Brokers Studios in New York. Coming up in just a couple of minutes, we're going to be joined by our friends at Bloomberg TV for our countdown to the close. You're listening to Bloomberg Radio.
the close. Bloomberg's comprehensive cross-platform coverage ahead of the U.S. market close starts right now.
This is the countdown to the close. 60 minutes left here in the trading session. Romaine Bostick, Taylor Riggs, Gina Martin-Adams in for Caroline Hyde. We're joined right now by our colleagues Tim Stenovic and Katie Greifeld in for Carol Massar. We welcome our audiences across Bloomberg Radio, television, as well as on YouTube. A rally here on our hands. It started pretty early in the session and appears to be sticking as we get closer to the close, Tim.
It certainly does, Romaine. Hey, since Caroline isn't here, I gotta show a little bit of love for crypto because I don't know about you guys.
Did anything happen to crypto over the weekend?
What about the K-Web?
Yeah.
Over the weekend, I could not take my eyes off of Bitcoin, specifically Saturday, though. I know maybe I need to get a life, but it's, kind of Bitcoin's fault for trading 24/7. But we saw it fall below 18,000 for the first time since 2020. It was on a 12-day losing streak. It seemed to turn around on Sunday, and it's still higher again today by about 3% right now.
I don't know what you guys talk about in your family group chats, but my phone was just full of family members texting about Bitcoin. I was on vacation trying to ignore.
See, this is true. Katie, we're cut from the same cloth.
I know, but in any case, you are seeing a rally today that is lifting Bitcoin a little bit after that horrible weekend it had. And interestingly, this risk-on sentiment feeding into volatility markets right now. I'm looking at the VIX. It's below 30, you guys.
Below 30 here, and you talk about a lot of questions right now, not only about valuations, but of course about sentiment. And at least for right now, the sentiment is still relatively high. You're looking at the S&P 500 right around 3778. That's basically the highs of the day. Similar story here for the NASDAQ, the Russell 2000, even the Dow Jones Industrial Average getting in on the action here, up by about 2.5%. Broad-based, to be sure, Taylor.
I love when you say broad-based, because the first time I said broad-based on air, Romaine corrected me. So I'm just thrilled when he gets to say that. You want to see broad-based, take a look at the individual sectors. We dive underneath sort of the top line index, and Gina's been all over this. When you think about sort of the leadership, the rotation, energy, you're up almost 5.6, almost 6% or so. When you think about the trend for the year, so much conviction in this trend, at least for today. Discretionary's in there as well, but I thought that was interesting. There's some Target and some Dollar Tree within that discretionary index. So that's certainly one that I've been watching. And technology trying to also hang in there as well. You have the tech stocks remain, you're up still about 2.9% or so.
Yeah, interesting action today. I mean, Gina's been talking a lot about how energy companies have been really leading the charge. I was taking a look at tech, and most of the tech companies are higher here on the day. Apple up by about 4%. Microsoft, Google, Tesla, actually one of the biggest gainers in the S&P 500. Then you have Meta Platforms. Meta's down 4% right now. It's not really clear of the news. There was a story about how they were settling some allegations by the U.S. government with regards to fair housing laws, but the shares are already weaker even before that news hit the wire. But they're down 4% here, and then an interesting move lower here in CRISPR Therapeutics. Also, no real news. They're holding an innovation day that started at 2 p.m. Eastern time. At some point, right around 2:30, 2:40-ish, the shares basically went from positive green to down about 12% in the span of about 20 minutes. They're now down about 12% here right now. We'll keep an eye on that and see exactly what caused the big investor reaction.
Yeah, I think that when you have such a mixed day where you've got sort of consumer discretionary and energy at the top, the first thing that comes to mind for me is, well, pick a side. Do you think inflation's going to stick around or do you not? Because those two are very divergent stories, and you just have to wonder if the inflation narrative might be losing its grip on the market. I show here inflation expectations well past peak on one series, still sticking around on the other.
Yeah.
But I actually think now the conversation does need to move to what happens when you pass peak inflation. We got PPI and import prices last week showing some signs of slowdown. Those tend to lead the CPI. Inflation break-evens and inflation swaps, both having peaked recently, would indicate that maybe the bond market is finally thinking the Fed might have things under control.
Well, I am curious, Gina, you said pick a side, and I'm wondering if it's that binary anymore. I mean, and I feel like that's part of the problem.
Yeah, and it maybe isn't that binary anymore, and that's kind of the point I'm making is, look, if inflation expectations have peaked, inflation loses its grip on the market, we can see a more diversified sort of market. It's not just energy and not anything else, but it becomes more about what is the longer term outlook in an environment in which inflation is not leading everything. Inflation is not leading every conversation. Margins maybe start to stabilize and the like.
Well, speaking of that longer-term outlook and picking a side, lots of questions and discussions just in the last 24 hours about whether or not there's going to be a recession, and if there is going to be a recession, when that recession is going to hit. Nouriel Roubini, the CEO of Roubini Macro Associates and a professor at NYU's Stern School of Business, he joined Bloomberg TV from the Qatar Economic Forum, powered by Bloomberg. He says, we're not in a recession yet. Check it out.
We're not yet in a recession, but we're getting very close to it. My baseline is one of a hard landing. If you're looking at consumer confidence, if you look at retail sales, if you look at measures of manufacturing activity, if you look at housing, they're all slowing down very sharply at the time where inflation is still very high. That's a stagflation. It's not just a recession.
Well, that was Nouriel Roubini, the CEO of Roubini Macro Associates and a professor at NYU Stern School of Business. Romain, it's interesting because if you look at what specifically he's saying, right, he's pointed to all these economic data points that we've gotten that show that there are recessionary concerns, but nothing about employment, of course.
Yeah, and I mean, look, I mean, obviously he carries a lot of weight. I mean, he's not known as Dr. Doom for no reason at all. I do want to sort of overlay, though, his comments with, and Taylor, you brought this up a little bit earlier on the television program, this LinkedIn post from Ray Dalio, who kind of talks about this idea that, yeah, even if things get better, let's say the Fed does sort of thread this needle in some way or another, the general idea, at least in Ray Dalio's mind, is that there's still going to be a lot of damage to the economy and to consumers specifically. The idea that fighting inflation and actually winning that fight has a lot of collateral damage to it. So it's not going back again to the sort of binary sort of outlook here. It's not just whether we go into recession or not. I think it's the path that takes us there.
And it seemed to be that Ray Dalio's conclusion was maybe this ends up in a stagflationary environment. And if you lay that on top of what we're hearing from Wall Street, from SocGen, from Goldman today, saying that equities, they haven't yet priced in sort of that worst case scenario, that recession fears, that's sort of stalking this rally that we're seeing today. It's hard to have too much conviction in it, it seems like.
Yeah, except you get the news flow, right, from the companies themselves that are actually telling you maybe it's not that bad. Lennar, we just highlighted earlier today, a classic housing stock. How does the economy go into recession if Lennar is still seeing orders growth above expectations is a big question. How do you go into recession without excess inventories of houses and autos is a huge question mark for me. That would be a very unusual recessionary experience. You've got to have a major downdraft in demand without that excess inventory out there right now.
Yeah, and how do you go into recession when the unemployment rate is still sub 4%, like we've seen of late? Well, that is going to do it for our cross-platform coverage. We'll be back in less than an hour for Beyond the Bell on Bloomberg Radio, Bloomberg TV, and YouTube.
You're listening to Bloomberg Business Week with Carol Messer and Bloomberg Quick Takes Tim Stenovic on Bloomberg Radio.
It's Bloomberg Business Week. Tim Stenovic and Katie Greifeld live in the Bloomberg Interactive Brokers studio in New York. Katie, I continue to think about this tension between all of the dour economic data that we've been getting. You talked about the Michigan consumer sentiment data that we're going to be getting later this week, and the way that Fed Chair Jay Powell last week specifically called that out as one of the reasons that he changed his mind from 50 to 75 basis points for the latest hike. At the end of the day, we're still seeing, though, and I get a lot of flack when I say this, 1.9 jobs available for every person in the U.S. who's actually looking for a job right now.
But think about the direction of travel. I mean, Powell himself has said that that's probably unsustainable.
Yeah, he said it's really hot.
Yeah, so we know that that's going to crack. We know that growth is going to slow. I mean, the huge question that we just can't answer right now is to how much? Enough to tip us into a recession? I don't know. And
I go back to this notion of the Fed's blunt instruments. And I got a reply on Twitter earlier today that said basically it's a shame that, you know, economic theory in this day and age, and it's worth revisiting, that we have to have 10% unemployment in order to bring inflation down. And I think that it speaks to the notion that the Fed can only do so much. It can't drill for oil, it can't refine oil, and it can't build houses.
I think it's a fascinating economic experiment that we're living in. Of course, that's somewhat of a privileged take, but from the perspective of a financial journalist, absolutely fascinating moment.
May we live in interesting times. And we certainly do from an economic perspective. Let's do a quick check of what things are looking like on the S&P 500, higher right now by 2.8% as we get under an hour to the close. The Dow Jones Industrial Average higher by 2.5%, and the NASDAQ is higher by 2.9%. Let's go now to a check on the latest world and national news. For that, we go to Nancy Lyons in D.C. Hey, Nance.
Thanks, Tim. The Speaker of the Arizona House is telling lawmakers this afternoon how he was pressured by then-President Trump to alter the 2020 presidential election results in his state. Rusty Bowers explains his response.
You are asking me to do something that is counter to my oath, when I swore to the Constitution to uphold it.
Bowers also says Trump attorney Rudy Giuliani failed to prove any claims of voter fraud. New facts are coming to light in the Uvalde shooting at Robb Elementary School during a Texas State Senate hearing today. Stephen McCraw, the Texas Director of Public Safety, says there's compelling evidence pointing to the fact commanders put the lives of officers before the lives of children.
The officers had weapons, the children had none. The officers had body armor, the children had none. The officers had training, the subject had none.
McGraw says it was an abject failure that went against everything law enforcement has learned over the last 2 decades since the Columbine massacre. Elon Musk says he has not decided whom he'll support in the 2024 presidential race. Bloomberg editor-in-chief John Micklethwaite asked the Tesla CEO about it at the Qatar Economic Forum in Doha.
I was simply asked if there was, if I had decided on who I would be supporting in the next presidential race. And I said I had not decided who I would support. Then I was asked, well, who might you be leaning towards? I said possibly DeSantis.
Asked specifically if he would support former President Trump, Elon Musk said he is undecided at this point. Global news 24 hours a day, on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries.
Thank you so much for that update, Nancy Lyons. We are going to be hearing more from Elon Musk in just a few minutes. His interview with Bloomberg editor-in-chief John Micklethwaite coming up in just about 10 minutes. Katie, among the most read on the Bloomberg Interactive, or on the Bloomberg, the Bloomberg Terminal, we are live in the Bloomberg Interactive Broker Studio right now, are a couple stories about Meta Platform. Shares are actually lower today at a 52-week low, and that's kind of inaccurate to even say. They're at a 2-year low at this point. They're the lowest since April of 2020, which is interesting given the rally that we're seeing. As Romain said, there's no clear news or catalyst that's bringing shares lower, but there is some important meta news to get to. The company is rolling out new ways for creators to make money on Facebook and Instagram, also launching updates that will help them build content in the metaverse, because not only is the metaverse, of course, important, but before we get to the metaverse, a way to get all the people who are creating content on TikTok over to create content on Instagram Reels is of the utmost importance.
And Reels, we know it's a big focus for Meta, and part of these new ways, it could include profiting from that short video platform, earning direct revenue are on all of the horizons for content creators, also displaying NFTs. Not a great moment for NFTs, but interesting to see Meta still has them as part of the business plan.
Okay, enough about that. I want to talk about what you're doing on Instagram versus TikTok these days, because you have in the past done a lot of lurking on TikTok. Have you started doing any of that on Reels yet?
No, I don't use Reels. I'm on TikTok. I mean, sort of a joke online is that everything you see on TikTok, you're going to see on Reels 2 weeks later. It seems like Reels, it doesn't have any, there's a lot of TikTokers. There aren't any Reels creators.
That's where I am on Reels. I find myself getting sucked into this universe when I look at Instagram of now following people who've kind of gone viral on TikTok and then posted those TikToks now on Reels. So it's like, I follow this guy who's like living in the woods in Canada. And, it all says TikTok on it because he's just stealing it right from TikTok.
Yeah, and he's marketing straight to you because you're probably not going to download a TikTok account or spend too much time on it.
No, not today. This is Bloomberg.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
From Bloomberg World Headquarters, I'm Charlie Pellet. Best level of the day. Let's head right over to the First Word breaking news desk for today's afternoon call. And here's Bailey Lipschultz.
Good afternoon, Charlie. Stocks are trading near session highs, rebounding after last week's rout. The Dow is up 745 points, S&P gaining 100, while the Nasdaq is higher by 315 points. The U.S. 10-year yield is at 3.3%, and small caps are up 20 points. All 11 main S&P sectors are trading higher by at least 1.7%, led by gains for energy and consumer discretionary. Nasdaq Biotechs rise 95 points, transports gain 200, semis are up 80 points, while the VIX is lower by 4.5%. Leaders in the Dow, United Health, Chevron, and Merck, while Disney and Home Depot are the only stocks trading in the red. Kellogg gained after unveiling plans to split into 3 independent companies, and homebuilder Lennar rose after quarterly revenue topped estimates. In deal news, Spirit Air rallied 8% after JetBlue raised its takeover offer again, and Mondelez agreed to buy energy bar maker Cliff Bar for $2.9 billion. Wrapping things up, DaVita dropped the most since 2001 after a Supreme Court ruling over dialysis coverage. Live from the First Word Breaking News Desk, I'm Bailey Lipschultz. Charlie.
Okay, thank you, Bailey. And to hear live breaking news over your Bloomberg Times Squawk, SQUAWK on your terminal, I'm Charlie Pellet. That is a Bloomberg Business Flash.
Thank you so much for that update, Charlie Pellet. In an interview earlier today with Bloomberg News editor-in-chief John Micklethwaite at the Qatar Economic Forum, Tesla's Elon Musk struck a sober tone as he forecast a probable recession in the U.S. and left doubts about his commitment to a $44 billion takeover of Twitter. Here's an excerpt of that discussion.
With respect to the Twitter transaction, there's a limit to what I can say publicly, given that it is somewhat of a sensitive matter. So I will have to be measured in my responses here, such as not to generate incremental lawsuits. Unfortunately,
that seems to be a risk you sometimes manage to overcome.
Yes, deposition minimization is, I think, important.
Have Twitter given you enough information?
Well, there are still a few unresolved matters. You've probably read about the question as to whether the number of fake and spam users on the system is less than 5%, as Twitter claims, which I think is probably not most people's experience when using Twitter. So we're still awaiting resolution on that matter, and that is a very significant matter. We're awaiting resolution on that. And then, of course, there is the question of will the debt portion of the round come together, and then will the shareholders vote in favor? So I think those are the 3 things that stand in the, that need to be resolved before the transaction can complete.
What about the general state of the economy? Does that weigh on you when you think about this? I mean, you just described it. You have a super bad feeling about the economy. Are you still in that position? I just said to you earlier, Joe Biden has just come out and said that a recession in America is not inevitable. How do you feel about the economy?
Well, I think a recession is inevitable at some point. As to whether there is a recession in the near term, I think that is more likely than not. It certainly isn't. It's not a certainty, but it appears more likely than not. And what do you think?
I'm with you. I agree with you. I think it's more likely. Can I ask you one particular thing to do with the Twitter bid, which is, you are one of the biggest and fastest growing investors in China. Tesla, you've talked about it being a third of your sales going forward. You're now buying Twitter, the kind of public forum for free speech. The Chinese historically don't tend to be very enthusiastic about free speech. Are you worried about whether you can keep those 2 particular horses running? Is buying Twitter going to get you in trouble with the Chinese?
Well, Twitter does not operate in China.
Yes.
So, and I think China does not attempt to interfere with the free speech of the press in the U.S. As far as I know, because I assume you're not under pressure at Bloomberg from China. So I think there's I don't think this is going to be an issue.
And in terms generally of that issue of freedom of speech and Twitter, you've talked about Twitter making it even freer and letting more people onto it. Is there a limit at all to who you think should be allowed onto Twitter?
Well, my aspiration for Twitter, or in general for the digital town square, would be that it is as inclusive, in the broader sense of the word, as possible. That it is an appealing system to use. So, I mean, ideally, I'd like to get like 80% of, let's say, North America, and perhaps, I don't know, half the world or something, ultimately on Twitter in one form or another. And that means it must be something that is appealing to people. It obviously cannot be a place where they feel uncomfortable or harassed, or they'll simply not use it.
That was Tesla CEO Elon Musk speaking to Bloomberg News editor-in-chief John Micklethwaite at the Qatar Economic Forum. You can check out more of that interview at Bloomberg.com. It's Tim Stenivek and Katie Greifeld. We're live in the Bloomberg Interactive Brokers studio in New York. Katie, there's a lot to pick apart here in that interview and a lot of takeaways, but perhaps what's most interesting to me is Elon Musk's view on the economy. He's got a really, he's got an interesting perch, given that he's the CEO of this multinational car company that has factories in China, in Berlin, and in the United States.
A unique perch, a super bad feeling. He did say that
Those were his words, super bad feeling.
Super bad feeling. He did say he thinks that a recession in the U.S. is inevitable. Also interesting to hear him talk a little bit about the Twitter deal. He said there's a few unresolved matters. He's still waiting for a resolution on that question about bots. Interesting, though, Twitter shares higher by about 3.2% right now, Tim.
He did say that China is not a problem for the company, which I thought was interesting. And we should note that he was able to do something that no other car company has been able to do in China by building that wholly owned Tesla factory. If you remember, every other car company historically has had to do joint ventures with a homegrown Chinese company. Musk was able to retain control of that Tesla factory. Again, check more of that out online at Bloomberg.com. You're listening to Bloomberg Business Week, and this is Bloomberg Radio.
Broadcasting live from the Bloomberg Interactive Broker Studio in New York. Bloomberg 1130 to Washington, D.C. Bloomberg 99.1 to Boston. Bloomberg 106.1 to San Francisco. Bloomberg 960 to the country. Sirius XM Channel 119. And around the globe, the Bloomberg Business app and BloombergRadio.com. This is Bloomberg Business Week.
It's Bloomberg Business Week. Tim Stanovic and Katie Greifeld. We're live in the Bloomberg Interactive Broker Studio. In just a couple of minutes, Katie's going to go from co-anchor to guest because we're going to talk all about her story. This story about an ETF that is short Bitcoin.
It's
Katie,
huge. Yeah. First of its kind.
the question is, did it arrive too late?
It's a big question.
Okay, we're going to get to that in just a few minutes. First, let's get an update as we get less than a half hour from close. Here's Charlie Pellet.
Thank you very much. We've got stocks higher across the board, holding near session highs. Let's begin with Bitcoin. After that weekend swoon, we've got Bitcoin up now by 3.5%, 21,134 on Bitcoin. More with Katie coming up in just a moment. S&P up 98, higher by 2.7%. This update brought to you by Informatica. In the cloud, your data has the power to do the extraordinary across any location in the cloud. For accurate and actionable insights, go to Informatica.com. S&P 500 index, as I mentioned, up 2.7%. The Dow up 2.4%, up 713. 30,600 on the Dow now. We've got NASDAQ up 303, up 2.8%. The 10-year's down 21/30 seconds. 10-year yield 3.30%. Spot gold down $8.50 the ounce, down 0.5% to $18.30. West Texas Intermediate crude oil up 1%, 110.65 a barrel on WTI. Equities are rebounding after last week's rout. It raised nearly $2 trillion from the S&P 500 index. Well, one of the major concerns for investors is the Federal Reserve and the odds of a recession. Mona Mahajan is senior investment strategist at Edward Jones.
The risks of a downturn are increasing. Probably we're looking towards the end of this year. But the only silver lining, or one silver lining we'll point to, is that we don't yet see the scope for a deep or prolonged downturn. So in that backdrop, maybe what the market's already priced in, S&P down over 20%, NASDAQ down over 30%, we're already starting to sniff out this mild downturn in the economy. And so the risk reward is getting more interesting here for sure.
Hertz is offering to settle about 3 dozen cases filed by renters who say they were wrongly arrested for auto theft. The settlement push comes a month after Colleen Batchelor took over as general counsel for the rental company and made it her top priority to end suits from more than 230 customers accusing Hertz of improperly calling in police on its renters, mostly while haggling about overdue rentals. Hertz shares down now by 0.4%. Recapping a Tuesday rally, S&P up 2.7%, 10-year yield 3.30%, Bitcoin up 3.6%. I'm Charlie Pellet. That is a Bloomberg Business Flash.
Thank you so much for that update, Charlie Pellet. Well, speaking of Bitcoin, our own Katie Greifeld, she's with me in the Bloomberg Interactive Broker Studio right now, has a story on the Bloomberg terminal. It's among the most read, and it's all about a short Bitcoin fund that is now out. It's the ProShare Short Bitcoin Strategy ETF. The ticker is BITI. And if you've been listening to us and paying attention to this space for a few months, you know that ProShares already has a strategy out when it comes to Bitcoin.
They do. They were the first to market with the U.S. Bitcoin futures ETF.
Oh, sorry. I thought you were going to say a spot Bitcoin ETF.
No.
Oh, no, because
no.
That doesn't exist
yet. No, okay. We have Bitcoin derivatives funds here in the U.S. So ProShares, first of its kind, launched that in October, mid-October, pretty much at the peak of Bitcoin. Now it's bringing out this short Bitcoin strategy ETF. So it's the first inverse ETF linked to futures.
Okay, what about timing here, Katie? Because if you were able to short Bitcoin through an ETF over the last, let's say, starting, 12 days before Saturday, you'd be a pretty happy camper. But you weren't able to do that, at least here in the U.S.
Well, you could have opened a margin account. You could have shorted BITO itself, the
sounds
ETF.
Complicated.
It is complicated. The idea here, ProShares is saying, I spoke to their CEO on the phone, that perhaps those investors who didn't want to get involved with that hassle this ETF will be a good avenue for that. And if you look at the costs involved, actually, so this ETF, it has an expense ratio of 95 basis points. If you wanted to short BITO, for example, for your short Bitcoin exposure, the cost to borrow on that is 13.9%.
Wow.
So it's a very expensive short. A lot of people want to do it.
Way cheaper to do it this way.
Way cheaper to just buy this ETF.
Okay, so we talked about timing for this ETF coming out. It's funny because, as you note in your story, the ProShares launched BITO with Bitcoin at record highs, and now they're launching BITI, BITI.
We're still working that out in,
I don't know.
in the industry.
It took a long time for us to figure out what to say with BITO, right?
BITO. We landed on BITO. So BITI, they're launching it after a record-breaking meltdown for crypto. So we'll see. I mean, if BITO marked the top, maybe BITI will mark the bottom if you believe that the universe is balanced that way. But if you think there's more pain to come, finally there's a short Bitcoin ETF.
Okay, we got other players also getting into this space here, right?
We do. This is an interesting industry story. So ProShares, again, first to market, really dominating this space. But you also have active filings from Direction, from AXS. They also have similar applications out there, haven't been approved yet. Direction, it's interesting. They actually filed for this type of fund back in October, right after BITO's launch. The SEC asked them to withdraw that filing. They ultimately did, but they put it back out there. They refiled, but that hasn't launched yet.
So people can go out and buy BITI right now if they want to bet against Bitcoin?
It began trading today, Tuesday, June 21st.
So how do we measure interest in this?
You would measure, well, we're going to get the flow data, and we should be able to see how volume settled at the end of the day. You remember BITO, it was one of the most popular launches in ETF history. Again, launched when Bitcoin was closer to 70,000. That seems like a long time ago. So we'll see. So far, it seems like this fund hasn't been met with the same sort of enthusiasm. But again, BITO, by many measures, was record-breaking.
What would the company say about this idea of how people want to play this market? If they want to short it, if they want to go long? I mean, because the company itself is hedged so I guess what I'm saying is does ProShares believe in crypto?
That's a good question. I mean, they would say that they want to offer their investors all exposures possible. They probably wouldn't take a stance on that. But they would also say, for all of those investors who want to express a multitude of views, hedge themselves, or take a directional bet, ProShares has the products. And now instead of shorting BITO, you have an entire ETF to do that at a lower cost. So their perspective is probably all about providing access.
Okay, what do we know, Katie, about Direction, AXS? They have applications for this. Do we know about expense ratios or ways that they sort of separate themselves from the one that was first to market?
We don't yet, but definitely a space to watch in the next couple of weeks because they all filed pretty close to each other within a few weeks. So if this fund is finally out the gate, you should probably expect others to come.
BITI?
BITI.
BITI?
BITO and BITI. We have them both.
So we think it's BITI?
I'm going to say BITI. I think
all right,
we
until we hear otherwise from ProShares, BITO and BITI.
You heard it here first, Bloomberg Business Week Radio.
All right, big thank you to Katie Greifeld. She hosts ETF IQ. It's on Wednesdays on Bloomberg TV. She's also senior reporter for Bloomberg News. Let's now get an update on world and national news. For that, we go to Nancy Lyons in D.C. Hey, Nance.
Hey, Tim, thanks. U.S. Attorney General Merrick Garland made an unannounced trip to Ukraine today to meet with his counterpart in that country. He says the two discussed efforts to hold Russia accountable for war crimes.
There is no place to hide. We and our partners will pursue every avenue available to make sure that those who are responsible for these atrocities are held accountable.
Garland's visit comes nearly 4 months into the invasion. In that time frame, Ukraine has logged nearly 11,000 potential war crimes. They are Republican state officials who voted for Donald Trump for president, but they've been telling the House committee investigating the January 6th insurrection they refused to support Trump's efforts to overturn the results.
Russell Bowers, Speaker of the Arizona legislature, recalled a phone call from the White House. Rudy Giuliani backstopped by President Trump, claiming illegal immigrants and dead people had voted.
And I said, do you have their names? Yes. Will you give them to me? Yes. The president interrupted and said, give the man what he needs, Rudy.
Bowers said there was no such evidence, and there were more calls urging him to reject the Biden electors in favor of a Trump slate.
You are asking me to do something against my oath, and I will not break my oath.
Trump supporters invaded the state capitol, including, the committee found, some who went on to Washington for January 6th. In Washington, Irv Chapman, Bloomberg Radio.
The Supreme Court has ruled on a case that could be a game changer for public education. In a 6-3 decision, the High Court ruled that public vouchers are allowable for private and religious schools in rural parts of the United States. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries.
Thank you so much for that update, Nancy Lyons. Tim Stanovic and Katie Greifeld were live in the Bloomberg Interactive Brokers studio in New York. Katie, we can't speak enough about crypto. You said that your family text was glued to crypto prices over the weekend, specifically Saturday.
Yeah.
It was madness in my home, too.
Yeah, and it covered a broad range. I mean, we talked about Bitcoin, we talked about Ether, we talked about Coinbase, the list went on.
Yeah, it's interesting seeing the way that the crypto companies that are publicly traded that do have to release information have pulled back. Coinbase, for example, and then you have the news today that BlockFi, the company it's a crypto lending platform, is taking on $250 million lifeline from FTX.
Yeah, FTX, interesting to see them sort of step in here and try to support the ecosystem.
Are they a competitor to BlockFi? They're an exchange. FTX is an exchange. BlockFi, has a lot of different products.
Yeah, known chiefly for its lending product. I wouldn't say they're direct competitors. There might be some gray area, though, but I don't know. I've seen some people on Twitter compare FTX basically to the Federal Reserve of crypto, the lender of last resort.
Well, didn't they also help out Robinhood?
I believe so. I'd have to fact check that. But yeah, we've seen a lot of sort of crypto companies helping out other crypto companies, providing financing and the like in this downturn.
I'll look that one up while you're talking, or maybe you can look it up while I'm talking. I might be getting it confused with another exchange. Hey, this story getting our attention, crypto donors pouring money into politics in May. Despite that downturn, political donations from crypto brokers, VCs, and investors doubled to at least $52 million through the end of May from the first 15 months of the current 2-year midterm election cycle.
Yeah, this is a really fascinating story. So super PACs, they saw 7-figure donations from players within the crypto industry as we gear up for the midterm elections. You have to wonder how much this can continue as the lines keep going down, Tim.
Okay, so yeah, the crypto exchange FTX did take a more than 7% stake in Robinhood.
There you go.
Okay, there we go. You're listening to Bloomberg Business Week on Bloomberg Radio. Tim Stanovic and Katie Greifeld on this Tuesday afternoon. This is Bloomberg.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Tape. This is a Bloomberg Business Flash.
So much now the 3-day.
From the world headquarters, I'm Charlie Pella. We've got the Dow, the S&P, and NASDAQ holding close to session highs, with the S&P up 96, a gain there of 2.6%. The Dow's up 692, up 2.3%. NASDAQ up 292, up 2.7%. Stocks holding close to session highs, following last week's rout that erased nearly $2 trillion from the S&P 500. S&P up 95 right now, again up 2.6%. 10-year yield 3.30%. Spot gold down $8 the ounce to $18.30, down 0.5%. And West Texas Intermediate crude down 1%, 110.65 a barrel. Again, recapping, stocks higher, S&P up 2.6%. 12 minutes to go ahead of the close. I'm Charlie Pellet. That is a Bloomberg Business Flash.
Thank you so much for that update, Charlie Pellet. It's 3:48 on Wall Street.
The following is an editorial from Bloomberg Opinion.
This editorial was written by the Bloomberg Editorial Board. Over the long weekend, Americans observed their newest federal holiday, Juneteenth, also known as Emancipation Day. The name blends June and 19th, the date in 1865, when Union soldiers arrived in Texas and declared that those in bondage were now free. Juneteenth is a celebration of America's early efforts to right a tragic wrong, but it also challenges the nation to confront the unfinished business arising from its original sin. In effect, the holiday asks Americans to reconcile their national aspirations with the reality of persistent inequities. That's an effort that should last year-round. So as the first federally recognized Juneteenth recedes into memory, Americans should recognize that the work of racial justice remains unfinished and keep pushing to make the country a more perfect union. This editorial was written by the Bloomberg Editorial Board. For more Bloomberg Opinion, please go to Bloomberg.com/opinion or OPIN Go on the Bloomberg terminal.
This has been Bloomberg Opinion.
I'm driving in my car. I turn on the radio.
How about you let me drive?
Oh, no.
Who's gonna drive you home?
Honey, please, I'll do the driving.
Drive on.
Excuse me, I want to drive.
It's the question that drives us.
This is the Drive to the Close.
That funky music will drive us till the dawn.
On Bloomberg Radio.
All right, less than 10 minutes to go here. We are seeing a rally on the S&P 500, the NASDAQ, and the Dow, of course, as well. 2.7% to the upside on the S&P, the NASDAQ higher by 2.8%. Eager to get into this with our next guest, Jeff Krumpelman, traveled all the way from Cincinnati. He's with us in the Bloomberg Interactive Brokers studios. He's the chief investment strategist and head of equities at Mariner Wealth Advisors. Jeff, good to have you with us. How are you this afternoon?
It's great. It's great to be back in New York. I haven't been here for a couple years. So, I'm going to go to a Broadway play tonight.
Nice.
And it's nice to be back. It's nice to be here on a green day, too.
Hopefully.
Thanks for arranging it.
Okay, yeah, well, hopefully you're back with us in person more, because it's really good to have you with us in the studio, Jeff. You say it's good to be here on a green day, so a big sigh of relief is the worst behind us?
Well, I think the operative part of that phrase was is the worst behind us. We do think that there could be more downside. There's things that's unsettling as we go through all these transitions that we all know about, Fed policy, pandemic to endemic as examples. Politically, we've got an election coming up. There's going to be transition there, so on and so forth. The economy is going to a slower phase, not a recession, we don't think, but a slower phase. And it's nice to see a little bit of green, but I do think we've got some downside from here. I think there's way more upside than there's downside. Yeah, far more upside.
Why do you say that? Because still on average, the S&P 500 from a price to earnings perspective is still above the historical average of where it typically has been. So by that measure, it's still expensive.
The average stock is down 31%. PEs have actually come down going into today to about 15, which is just about average. And if you look at interest rate environments like we have today, it's actually below average. It's attractive. And if you look at the equity risk premium, the earnings yield that you get because earnings are still strong, it's still above average. So that makes the market kind of attractively priced. And we are at 3.6% unemployment right now. It is very rare to see scorched earth, results in the economy and trend when you're at 3.6% unemployment. So, one of the things, not to belabor this, but a lot of peers are talking about an average bear market might be down 40%. Well, that's true if you include depression periods like 29 and 37, 73 when you had oil embargoes going on, and then you look at 01 and 07. I mean, those were really awful times where you're worried, in some cases, of breadlines, right? If we have a recession, it should be a very mild recession. I'm not really concerned about recession. It's really a question of where will rates peak, and we think they'll stabilize. The economy's already slowing. We think they'll stabilize at a reasonable level, not as high as people fear, and boy, with earnings strong, it should be good.
And you brought up where I want to go, the concept of the earnings yield on the S&P 500, still at a healthy place. But you look at the 10-year Treasury, I see 3.3%. If you look at the average yield on investment-grade corporate bonds, at about 4.5%. At what point does fixed income become more attractive than equities?
Well, I think that part of the reason why we aren't saying buy on the dips is because people are not rushing into bonds. Every time we've had fear in the past, they've rushed into bonds, and that's brought interest rates down, and then you go, wow, look at that dividend yield, really. So that's not happening right now, which I think is part of the reason why we say don't buy on the dip yet. Hold your ground, don't buy on the dip. I do think that bonds in the shorter period, 2 to 5 years, are attractive at this point. They're over 3%. And if you buy individual bonds and you can make 3%, you have very little downside, very little interest rate risk because you just hold it to maturity and then you can roll it over. So it sounds simple, a keep it simple strategy, but I do think finally bonds at that level, I wouldn't go out 10 years because the yield curve is so flat at that point after you get through the 5-year. But yeah.
And to your point that we haven't seen that rush into bonds, I mean, what do you think is sort of stopping that? Is that just inflation fears that that'll just erode your any gains you could get, or is it just that yields haven't been high enough to really compete and be attractive with some of the other asset classes?
Well, what's catching the headlines? It's inflation, it's the Fed rate hikes, and so people are afraid that those rates are going to continue to go high, and if I buy, I'm going to lose money, and I have significant downside. That's true if you own funds and if you own longer dated bonds, but it's not if you are buying short and certainly in individual bonds.
Hey, Jeff, I want to get to some of your stock picks because you've got some great names on here. Got to start with Tesla. We had an exclusive interview with Elon Musk over at the Qatar Economic Forum powered by Bloomberg. Our editor-in-chief, John Micklethwaite, conducting that. And a lot of Musk's commentary focused on the state of the economy, what he's doing with Twitter. But let's talk Tesla because that's the company that provides the source of most of his wealth at this point. And the stock's been on a rough ride over the last few months. Why are you so bullish on it?
It's interesting because Tesla for the longest time it was maybe analogous to Amazon, 20 years ago. And, you had, this growth and looked like a nice path to increasing production, but there's no earnings. And it was just, choking on the need for cash, right? The balance sheet was horrible, and they just had to keep raising funds. That's all changed. It's profitable. It's the most profitable auto company in the United States, 80% of electric vehicle sales market share. And in addition to being an auto company, and if you think, EV isn't going to work, maybe you don't own Tesla, but clearly that's where we're headed. You got charging stations, you have solar, you have so much more than just an auto company, the advanced driving systems that they manufacture. You've got a PE that's about 45 times, but you've got 35% growth and a long runway with a great product. So we just think that at 1,200, maybe it's not comfortable. At 600, it's off 50%. In the 700s now, I guess. That's where we find it very attractive.
Best performer in the S&P 500 on a points basis today.
There you go.
There you go. Nice size and scope there. We don't have much time left, but I'm curious to hear some of your other high conviction calls. NVIDIA jumps to mind.
Just 30 seconds.
How much?
30 seconds.
30 seconds, quick. So NVIDIA is similarly, it's off, 40, 50%. And they make chips for artificial intelligence, the data center, and the cloud. And that is not going away. It is, leading edge in the chips that they make, certainly for the gamers. And the chip that is out there can be used for new uses like artificial intelligence and radiology. So we think it's the best positioned semiconductor company in the world.
Jeff,
at these levels.
Jeff Crumpelman, Chief Investment Strategist and Head of Equities at Mariner Wealth Advisors, with us live in the Bloomberg Interactive Broker Studio, usually in Cincinnati. Jeff, really appreciate you taking the time and joining us on Bloomberg Business Week. Well, coming up next, it's Beyond the Bell. It's our cross-platform coverage of the market close. We're going to be joined by our colleagues from Bloomberg Television. You're listening to Bloomberg Business Week on Bloomberg Radio. Katie Greifeld and Tim Stenavec, and this is Bloomberg.
Beyond the Bell, Bloomberg's comprehensive cross-platform coverage of the U.S. market close starts right now.
And right now we are 2 minutes away from the end of the trading day. Romaine Bostick, Taylor Riggs, Gina Martin-Adams counting you down to the closing bell, and here to help take us beyond the bell. It's our global simulcast, joined right now by Tim Stenavec and Katie Greifeld. We welcome our audiences across Bloomberg Television, Radio, and YouTube to parts the crucial moments of the day. First trading day of the holiday shortened week, Tim.
Yeah, and it's looking like it's a pretty good one, at least if you're long this market. Hey, we just had a really interesting conversation with Jeff Crumpelman. He's over at Mariner Wealth Advisors. They're based in Cincinnati, but he's here in New York City. He was in the studio with us. And he said the worst is behind us. Yes, there is still, could be some downside to equities here, but he thinks a lot of the selling has already happened.
And it was interesting. I mean, that is sort of predicated on the fact that he doesn't have a recession as his base case. Really sort of the question underpinning everything in markets right now. But in any case, today looks like a big, broad rally.
It's good to hear some signs of optimism or someone with an optimistic tone. The worst is behind us. Our fair value model would actually say something quite similar, where you've only got about 100 points of downside left in the index before you've fully priced recession. We're also noticing that some of the capitulation indicators started to emerge last week. So certainly some of the work that we're doing would confirm that. And the market bounce today, a lot stronger than the bounce on Friday. Friday would have been a predictable bounce. This follow through over the long weekend could be seen as at least a sign of some stabilization maybe emerging in the market after such a rough week last week.
And Romaine, I wonder if we'll get into this with Gina a little bit later too, but I wonder if we start to need to see some of those inflation calls peak, maybe some of the huge moves higher in yields, if that starts to stabilize a little bit for us to return back here to the equity market.
Yeah, and what does post-peak look like, really? I mean, I think that's a big part of the question here. We've been running hot, really, for more than a year now on all the major inflation metrics that the Fed would, of course, pay attention to, whether they can get that under control. Still open for debate. The Dow Jones Industrial Average closing the day higher by about 640 points, up about 2% here on the day. This is going to be the story pretty much across the board. The S&P 500 higher by about 2.5%. The NASDAQ Composite also higher by about 2.5%. And let's take a look at the Russell 2000, which didn't miss out on the action today, going to finish higher by about 28 points or 1.7%.
I'm wondering if this is considered broad-based, Romaine. 442 stocks moving higher in the S&P 500, only 62 moving lower. I think that counts as broad-based.
I think so, but you have to look at the percentage, Tim. I mean, what does the percentage tell you? Can you do the math on that? It's 88%. I do the math.
Do you do the math, or do you have it in front of you?
I have it in my head. I'm a savant. What can I say?
All right, you got to teach me your ways.
Well, Tim, I will show you broad-based as well.
Thank
we
you.
take a look at sort of a deep dive underneath the surface level to give us an indication of what some of the smaller sectors are doing here. Of course, within the S&P, the sector winners and the worst performers here for the radio audience. And well, everything is green on the screen, right? Let's start with the best performers. This feels so risk on with autos and energy. You're up 5 to 8%. Even household products and food and staples, those are up about 3.5% as well. I go to the quote, worst performers, but you're still in the green. A lot of that is transportation and media, maybe some of those defensive sectors as well, some durables in there. Even the worst performer was still up about 1% or so, Katie.
Yeah, it was pretty easy to find some gainers today. Let's start with Kellogg's, because it's rallying today after news that it's going to split into 3 independent companies. Global Snacks going to be the largest company among those 3. Snacks, I don't know, you guys, they were huge during the pandemic. Kellogg's looking to build
Snacks
that as
huge during the pandemic. They were huge before the pandemic.
Breaking
too.
news, snacks. A lot of people ate them.
Have you ever just like stood over like the kitchen counter and just eat cereal out of the box?
I'm not going to admit to that, but you know,
like one of my 3 meals a day.
As I've heard people do.
Apparently, a lot of people did because, again, snacks, big 2 years. Kellogg's looking to build that as a standalone company. Kellogg shares closed 2% higher evenly. Twitter, too, rallying alongside everything else, even though Elon Musk, he left a few question marks over that Twitter deal. This was in conversation, of course, with Bloomberg News editor-in-chief John Micklethwaite. Musk said that there are still a few unresolved matters. In any case, Twitter shares closed higher by over 3%, actually. And it was a big day for energy, Diamondback Energy leading the way there. That's after news that the company approved an increase to its return of capital commitment to at least 75% of free cash flow. Diamondback shares closing 8% higher, Tim.
All right, Katie, you got the gainers, I got the decliners. Let's start with Netflix, among the worst performers in the S&P 500, at least on a points basis, down 2.6%. Romaine, earlier you mentioned Meta Platforms. That was lower. No real news there. Kind of a similar story with Netflix. We did see that Stifel cut the price target of Netflix, but interestingly enough, after that note came out from Stifel, shares moved higher, even though they dropped the price target from $300 to $240. The firm did write that Netflix has become more attractively valued following recent weakness, down 72% from its highs. And then DaVita Healthcare, this is a really interesting one. Shares moving 15% lower today. It's a dialysis provider, dropped the most in more than 20 years. This after the Supreme Court ruled in favor of Marietta Memorial Hospital and its employee health plan. It's all about a dispute over how much it pays for kidney dialysis, and the dialysis companies, the losers here. Jefferies calls this a win for Marietta and a, quote, clear negative for dialysis providers like DaVita, and Fresenius Medical also closed lower on the day. And JetBlue finishing the day down by 1.6%. They fell after the company raised its offer to buy Spirit to $33.50 per share. That's up from $31.50 per share. That was yesterday, but of course the markets were closed, so the market's digesting that information today. This move, just the latest in a flurry of revised offers in that months-long battle over who is going to win control of the ultra-low-cost carrier.
Let's take a look at, well, what is maybe no longer ultra low cost. Yields continuing to rise here within full faith and credit when we take a look at yields across the board. But I think what's so interesting, we've been focused a lot last week on sort of the front end of the yield curve, Tim, here, but still you're only about 2 basis points higher. The shift for me, given a lot of the housing data, some of the surge in the mortgage rates, has moved out towards the 10s and the 30s. And Gina, that's really where we've seen a lot of the rate volatility as of late, up about 10 basis points or so on the day. And yet we're still only going back to the levels that we had last Wednesday with that Fed meeting. So the intraday moves feel big, but sort of on a longer term perspective, it feels a little bit range bound as of late until we sort of get the next big move from the Federal Reserve.
Yeah, and I think that perspective is incredibly important to keep in mind right now, because we may be at a point where at least core CPI does appear to be turning over. If the bond market is correct and inflation pressures are starting to ease, maybe the Fed is starting to get things under control. That could be a major relief point for the equity market, where risk assets has really taken all of their cues on what's going to happen from the bond market and from the Fed, frankly.
And I still don't think there's a little bit of disconnect, I think, between what we're seeing here in the markets and what I think a lot of consumers, particularly on the lower and the middle income spectrum, are actually feeling out there. And Jay Powell, guys, is going to be on the Hill for 2 days of hearings. And, you know, obviously to talk about monetary policy, he probably won't break news, but it'll be interesting to see sort of how these senators and these representatives sort of approach their line of questioning. I assume you're going to get a lot of sort of anecdotal stories about, you know, some single mom who's struggling to sort of put food on the table. And I think some of the more global ramifications, too, of a lot of these disruptions and whether that comes back to bite the U.S. economy.
Yeah, that's a really good point, Romaine. I mean, if you look at high energy prices, this is not just something that's happening here in the U.S. Norway last week became the country with the highest gas prices, $10.30. That's the equivalent in kroner that 1 gallon of gas costs in Norway.
How much is that in Bitcoin?
Well, it depends on if you're doing it today or if you're doing it on Saturday when we saw Bitcoin fall below 18,000. But look, I think that it's important to remember here just that the Fed, and I say it over and over again, doesn't have the power to drill for more oil. It doesn't have the power to build more houses. It doesn't have the power or the refining capacity to refine oil. So it can only do so much in this environment.
And it was interesting to hear in last week's press conference. I mean, we know that the Fed, it focuses on core readings of inflation, but Powell acknowledged that energy prices, which obviously are not included in that core measure, that feeds into what Americans feel, where they expect inflation to go. So even though, again, the Fed's focused on core, it's paying attention to all of these inputs into inflation and what people actually feel.
I think it's a good point. What people will actually feel from the perspective of inflation is hopefully some easing food costs. If you look at what's happening with across the board, grains and oil seeds all now down year to date, all the major categories down year to date. As the planting season starts to come to the forefront, we start to find out maybe the pressure in food will start to ease in the next 6 to 12 months. That can help a lot, but there is this big divergence out there. What they see at the pump doesn't appear to be changing anytime soon. So hopefully they get a little bit of reprieve, but not all of it is easing so far.
Have to say, Morgan Stanley, their economic and agricultural team out with a note today remains saying that the majority are saying that food inflation not likely to peak in 2022, where you're looking at all of these massive commodity prices. And again, sort of bringing it back to that point about how consumers are feeling on the ground, not even to mention coming up on some of the midterm seasons as well, but how you have a Federal Reserve that tackles that as well with the focus on core.
Yeah, and we talk about that policy mistake. And look, even if you are sort of at some peak level, whether it's the next month or that, it's sort of how long does it take to get some of those numbers back down to, I guess, the mean or whatever it was over the last few years. Most of the forecasts I've seen seem to put that way out into 2023, maybe even 2024.
And we know that Fed Chair Jay Powell repeating last week that he's committed to that 2% level when it comes to inflation.
Yeah. Good luck.
Good luck. He's going to need a lot of it, given all the external factors and the supply side stuff that is happening, not just here in the U.S., but around the world. That is going to do it for our cross-platform
Where's Carol? She's really taking this Juneteenth holiday.
She's off
seriously.
today.
Yeah.
Carol's off today.
Right.
Yeah.
I'm here, though. If that's
Don't forget about
that's
Katie.
bad.
All right. Fun stuff, guys. We're going to be back again tomorrow at the same time, same place on Bloomberg Radio, Bloomberg TV, and on YouTube.
This is Bloomberg Business Week with Carol Masser and Bloomberg Quick Takes Tim Stenovic on Bloomberg Radio.
It's Bloomberg Business Week. Tim Stenovic and Katie Greifeld. We're live in the Bloomberg Interactive Brokers studio in New York. As we just went through some of these numbers, green day for the S&P 500 higher by 2.45%. The NASDAQ higher by 2.5%. The Dow Jones Industrial Average finishing the day higher by more than 2.1%. Let's go now to Washington, D.C. for a check the latest world and national news. For that, we go to Nancy Lyons. Hey, Nance.
Thanks, Tim. The January 6th Select Committee today held another public hearing, this time speaking with state election officials from Georgia and Arizona who were pressured by then-President Trump to change election results. The Republican Speaker of the Arizona House, Rusty Bowers, refuted Trump's summary of their phone call. He's questioned here by Congressman Adam Schiff.
To quote the former president, during the conversation, he told me the election was rigged and that I won Arizona, unquote. Did you have such a conversation with the president?
I did have a conversation with the president. That certainly isn't it.
Bowers says the Trump team never showed him any proof of voter fraud. The Supreme Court has released several opinions today, but none of its most watched decisions for this term. Bloomberg's Nathan Hager with more.
The justices have yet to rule on a Mississippi case that could overturn abortion rights based on a leaked draft opinion that was published in Politico. We're also awaiting a decision on New York's strict concealed carry law. Among today's decisions, the justices refused to shield Bayer from claims that its Roundup weed killer causes cancer. And in a 6-3 ruling, they said a Maine program that covers private school tuition in areas that don't have public schools is unconstitutional because it excludes religious schools. The next round of opinions from the Supreme Court comes out this Thursday. In Washington, I'm Nathan Hager, Bloomberg Radio.
Microsoft says it will stop selling artificial intelligence-based facial analysis software tools after the algorithms were shown to exhibit problematic bias and inaccuracies. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Nancy Lyons.
Thank you so much for that update, Nancy Lyons. Tim Stenovic and Katie Greifeld live in the Bloomberg Interactive Broker Studio here in New York. Katie, I feel like it's kind of the return of the meme stock in a certain sense.
Why do you say that?
Well, a headline crossing the Bloomberg terminal. Revlon closing up 62% to the highest level since April 29th. Retail investors are dashing into Revlon today. This is a stronger appetite for riskier assets following a U.S. holiday helped fuel a more than 16-fold jump in trading volume just for this one stock.
This is nuts. So I was off on Thursday and Friday of
Were you
last
really
week.
off though, or
I
were
was-
you just like looking at your computer,
I was
looking at your
doing
Bloomberg terminal,
my best. You know, I was
the
trying
app
to,
on your iPhone?
I was trying to feel the sun and touch grass and see trees, but it did catch my eye that Revlon filed for bankruptcy last week on June 15th. It has huge amounts of debt, but still, it's just been absolutely soaring. It's up 470% since last week or something. It's pretty crazy. Bailey Lipschultz, though, all over that it looks like it's mostly retail traders. You've seen social media mentions just absolutely take off.
Yeah, that's what Bailey writes. He writes that retail traders are behind a portion of these gains, taking advantage of a 2.6% advance on the S&P 500 index and in a maneuver reminiscent of other bets in low-priced, debt-laden companies. Let's think back to Hertz Global, a little company called...
The OG meme stock.
It really was. You're right.
Was.
Summer of 2020.
That was huge.
Yeah, just post, sort of the worst of COVID.
We were so young then.
We were young. We didn't even know what a meme stock was at that point. And then you had AMC happen back in January of 2021. Individual investors are turning their attention to the stock in hopes of a quick profit. But what's going to end up happening with the company? It was Revlon, that is, was among the 10 most traded assets on Fidelity's platform today, with buy orders modestly overpowering sellers. The stock has attracted roughly $10 million in retail trading cash over the past week, with nearly $6 million pushed into the company on Friday alone. That's according to research from Vanda Research. You're listening to Bloomberg Business Week. Tim Stanovic and Katie Greifeld live in the Bloomberg Interactive Broker Studios.
updates, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
From Bloomberg World Headquarters, I'm Charlie Pellet. A rebound to kick off the new trading week after last week's rout that erased nearly $2 trillion from the S&P 500 index. The S&P up today by 2.4%, led by energy and consumer discretionary shares, while the tech-heavy NASDAQ 100 surged 2.5% following the long weekend. Today, the S&P 500 index up 90 points, a gain of 2.5%. The Dow up 641, up 2.1%. NASDAQ up 271, a gain of 2.5%. Bitcoin at 20,718 now, up by 1.4%. Spot gold down $5 the ounce to $18.33, down 0.3%. The 10-year down 19.30 seconds, 10-year with a yield of 3.29%. West Texas Intermediate crude up 1%, 110.65 a barrel. I'm Charlie Pellet, and that is a Bloomberg Business Flash.
Thank you so much for that update, Charlie Pellet. Well, we talk about supply chains all the time. The pandemic, lockdowns, the shift in how consumers have spent their money over the last 2+ years have just wreaked havoc on supply chains. So what are leaders supposed to do? How does a CEO need to change the way that she or he thinks in this environment? Daniel Weiss is the co-author of a brand new book. It's all about the changes that businesses need to make in order to focus on suppliers and to thrive in the post-pandemic world that we've started to see in the last 2 years. Daniel's managing director and senior partner at BCG, that's Boston Consulting Group. Also the co-author of Profit from the Source, Transforming Your Business by Putting Suppliers at the Core. Joining us this afternoon from Miami. Daniel, how are you?
Thanks, I'm fine, and thank you very much for hosting me.
Well, it's really great to have you with us. What would you say the biggest change that a management committee needs to make, an executive needs to make in order to shift their thinking post-pandemic to focus more on the supplier? Because we know what happens when a supplier cannot provide the goods.
Well, that's something we actually do see. I'm personally waiting now 16 months more for my electrical vehicle because the automaker is struggling to get the parts in. And that is true for many, many other industries as well. So for me and my co-authors who have just written a book called Profit from the Source, the answer is clear. The answer to that is putting suppliers at the procurement function at the center of business attention. And we know this might be a surprising and unconventional view because suppliers are often seen as dispensable. But in those who live in, it's actually proven that they are not dispensable. And procurement has been often an unloved, uncleverest part of many call it even corporate Siberia. And that is what needs to change. There's actually a Harvard study out from 2018 where it says CEOs spend just 1% of the time on focusing with their suppliers. 7 minutes a day? Really? Is that good enough at those times? We don't think so.
Yeah, that's not how they're thinking right now when this is, all they can think about. I mean, we saw Ford say last week that higher component costs have wiped out all profit from the new electric version of the Mustang, the Mach-E. So we know what happens when components go up and supplies go up. But I wonder, Daniel, to what extent is this out of the control of companies in a globalized economy, in a globalized world? We know what happens when Shanghai locks down or when one country controls components or raw materials, and there's only so much a company can do. How do you succeed in that environment?
I think my own personal epiphany on this came in 2014. It was in 2014 when Russia annexed the Crimea, which was part of the Ukraine. And it already then foreshadowed some of the lines what we are seeing today. And what I want to say with this is we need to get prepared. And some talk about black swans. I don't think we can prepare for them, but I do think we can prepare for great rhinoceros. So those things we are seeing with a certain likelihood to happen. If we know a Ukraine conflict is a possibility, if we know there might be a second or soon next to be lockup in China again because of the COVID situation, we need to and transparency on the supply chain. And if we then see an exposure, we need to prepare. And those things, Ukraine happened in 2014 with the Crimea. The pandemic situation is now with us for, unfortunately, two and a half years. there's things we can learn, and I think the only answer to that is prepare. Get yourself prepared. It's not good enough to only have inventory. It's better to actually change the supply chain to a setup which appears less risky.
And when we think about what CEOs should do and what they need to do, does that change from industry to industry? I mean, is something that a CEO of an automaker should do when it comes to the supply chain and sort of their relationships there, is that different from what, say, a tech company should be doing?
We actually do think so, yes. The one common thing we would argue, and that's also what we say in the book, is that we need to put a lot more attention to the important suppliers. So really treat them as friends, partner with them, spend more than 7 minutes with them. Because if you have a share of mind with them, they will help you also in crisis. But back to your question, I think it's very fair to say they are different. If you work in the pharmaceutical industry, think about Pfizer and BioNTech. The only thing they care about is quality and speed. We need to have the vaccine out to the market fast. The quality must be perfect. Let's think about auto. That is more about supply chain risk resilience topic. Innovation is top of mind because of the move away from the combustion engine to the electrical powertrain, and so on and so forth. I think it's very true that different industries have different needs, but the one common thing is that suppliers in your ecosystem, strategic suppliers, can really help you to achieve those goals.
Daniel, I'm wondering specifically about onshoring and the idea of making sure that supply chain is a smaller chain or a chain that's more closely connected to headquarters or the country in which a company is domiciled. Just in the last 30 seconds that we have with you, do you think we're going to see, given the challenges over the last 2 years and the trade challenges before that during the Trump administration, specifically with China, are we going to see more and more companies onshore, and is that permanent?
I think what we're actually seeing as we speak is that supply chains are being reconfigured. Very true.
Wow.
And I think many companies are taking a look on where they are sourcing. Where they are sourcing for different reasons. It might be trade conflicts, it might be war, like in Europe at the moment in Ukraine, or it might be upcoming tariffs. For example, the CO2 border tariffs coming up. So many reasons, but yes, the localization becomes even more important. And localization meaning not only coming close to your own factories, but close to where you reside in the market.
Daniel Weiss, Managing Director and Senior Partner at BCG, also the co-author of Profit from the Source, Transforming Your Business by Putting Suppliers at the Core. You're listening to Bloomberg Radio.
Broadcasting live from the Bloomberg Interactive Broker Studio in New York. Bloomberg 1130 to Washington, D.C. Bloomberg 99.1 to Boston. Bloomberg 106.1 to San Francisco. Bloomberg 960 to the country. Sirius XM Channel 119. And around the globe, the Bloomberg Business app and BloombergRadio.com. This is Bloomberg Business Week.
It's Bloomberg Business Week. Tim Stanovic and Katie Greifeld, and we are live in the Bloomberg Interactive Broker Studio in New York. Katie, I've been excited about this upcoming interview.
I know.
We got Rory Harvey coming back with us. He was last with us back in December. He's Global Vice President of Cadillac. He's going to join us to talk all about the Lyric EV. It's the Cadillac SUV that's electric. And you are going to have to wait a long time if you want to get your hands on one of those, because they are just taking orders for 2024 delivery at this point. First, though, Charlie Pellet, you've been keeping an eye on how the trade ended up today. What's it looking like?
Indeed, we had stocks driving higher today. General Motors, for example, up by 2.4%. The Dow, the S&P, and NASDAQ all very much in the fast lane today, with the S&P up 90 points higher by 2.5%. Dow Industrials rallied 641, up 2.1%. The NASDAQ Composite Index up 271, up by 2.5%. So after a long holiday weekend, a Tuesday rally, equities rebounded after last week's rout that raised nearly $2 trillion from the S&P 500 index. 10-year yield 3.28%. Spot gold down 0.3%, 18.34 the ounce, while West Texas Intermediate crude was up 1%, 110.65 a barrel. Bitcoin now up 1.8%, 20,787 on Bitcoin. Sentiment this week is being helped by comments from President Biden that a U.S. recession is not inevitable. And on right here on Bloomberg Business Week, Jeff Crumpelman, Chief Investment Strategist at Mariner Wealth Advisors, talked about the odds of recession.
If we have a recession, it should be a very mild recession. I'm not really concerned about recession. It's really a question of where will rates peak. And we think they'll stabilize. The economy's already slowing. We think they'll stabilize at a reasonable level, not as high as people fear. And boy, with earnings strong, it should be good.
Kellogg says it will split into 3 independent companies, sparking a rally in the food conglomerate shares. Kellogg today up by 2%. DocuSign shares fell after Dan Springer agreed to step aside as chief executive officer. DocuSign lower today by 1.7%. Recapping 10-year yield 3.28%. S&P up 90, a gain of 2.5%. I'm Charlie Pelleton. That is a Bloomberg Business Flash.
Thank you so much for that update, Charlie Pellet. Really appreciate it. Well, you heard me mention that the Cadillac Lyric is sold out, not just this year, not just next year, but for all of 2023. So if you want one, you're going to have to wait until 2024. Cadillac putting customers on the waiting list for it now. Back with us is Rory Harvey, Global Vice President of Cadillac. He joins us via Zoom from Park City, Utah. Rory, good to have you back with us. How are you? Trying to get Rory. I think his computer might have froze, so we're still going to try to get Rory back.
Absolutely fine, thank you. It's
good to have you. Really good to have you with us, Rory. I want to start with the news about the Cadillac Lyric, and I'm wondering what is constraining supply so much. We've of course heard about everything related to components. We know that it's been a nightmare for car companies to try to get chips and also the raw materials that are just required for batteries here. But talk to us about why the Lyric is 2 years out at this point.
Yeah, I guess firstly, we're looking at ways that we can expand the capacity. I'm not sure actually in terms of constraints that we have a massive amount. Probably at the moment we've got just such a massive amount of demand. When I was last on the show, I think we gave the update that in terms of the debut edition, it sold out in just over 10 minutes. And then we opened the order bank on May the 19th. And for the 23 model year, which goes through till the end of February, we sold out in 4 hours. So the demand for the Lyric is just absolutely
Rory.
So we're very, very pleased about that.
Rory, our team is going to work on your connection here. I know you're in the mountains in Park City, and we're having a little issue hearing you. So we're gonna reconnect with you. Katie and I are going to chat for a minute all about this and the problems that the EV market is facing right now. Katie, anecdotally, I can speak to at least what's happening in my family. I think it's been almost a year since my dad put an order in for the Mach-E Ford, and I saw him over the weekend, and I said, he still doesn't have it, obviously. and I said, so any update on when you're going to get this car? He's got no idea when that's going to happen. He hasn't heard from Ford when that's going to happen. And he's like, at this point, I don't know if I'm going to just stay on the waiting list or try to find something else. And I think that's a real risk for these companies when there is a waiting list like that.
Well, I have an anecdote to
Okay.
counter that. My dad finally got his Rivian delivered
Nice.
in April in Florida. I was marooned there with COVID, so I actually got to see it. Pretty cool. But, that was years in the making. He had been on that waiting list for years. It just seems like it's not just, a Cadillac problem. It's everyone's problem.
Exactly. And that's the real point here. And we did hear from Ford last week that all of the EV profits from the Mach-E's that have been sold were wiped out because of higher components and raw material costs. Hey, there's a great episode, of the new Oddlots podcast that talks all about oil. And I don't know if you've had a chance to listen to it yet.
I haven't, but I know that you listen to them. It seems like as soon as they come out.
Yeah, I do. I don't know. I
Do
do
you
love.
get alerts in the middle of the night and just
I don't,
tune in?
I don't know. This was a really good one.
Yeah.
And I listened to it last night, and their guest made a really interesting point about the transition to electric vehicles. And when you buy an EV and then sell your internal combustion engine vehicle.
Are people doing that though, or are they still just playthings,
Oh no, they're buying them and then getting rid of their ICE vehicles.
Interesting.
So, but that's not getting them off the roads.
Yeah.
That means that they're still going to be on the roads for, up to 20 years, not just here in the U.S., but then around the world. Hey, let's get back to Rory Harvey, Global Vice President of Cadillac. He joins us on the phone from Park City, Utah. Rory, you there?
I sure am.
All right. Well, modern technology failing us, so we're going old school with the phone here. Definitely appreciate you taking the time to get things set. So you were talking about the wait list for the Lyriq. Why so many challenges in fulfilling demand right now?
Yes, I guess at the moment there's just significant demand for the product. If you looked at it, we had expectations that we set. We pulled the vehicle forward 9 months, and at the moment demand is exceeding our expectations. So we're looking at expanding our capacity. We're looking at gaining incremental manufacturing capacity. We're looking at gaining incremental components, and we've actually expanded our production through till the end of February significantly over the original plan. So at the moment, it's more a case of being able to keep up with the demand. There's not specific challenges necessarily related to semiconductors, etc. It's just significant demand.
Okay, we'll talk about that demand here just in the last 30 seconds that we have with you, and then we're going to do a break, and then we'll come back with you for some more, Rory. But give us some numbers here about demand.
Yeah, so we had about 250,000 hand raisers. We've not disclosed our production numbers for model year 2023, but suffice to say that it sold out within 4 hours. The limited edition, the debut edition that we put on sale initially, again, sold out in just over 10 minutes. So, there's just so many people that are excited about Cadillac coming forward in terms of the all-electric Lyriq. It's fantastic. It puts a smile on our face. We're here in Salt Lake City, Utah, and it's a lovely day, and we've got the press launch event for America going on as we speak. So,
okay, so stick with us.
Revved up about the vehicle.
Rory Harvey, Global Vice President of Cadillac. Stick with us. We're going to do some news, and then we're going to come back with more with Rory Harvey of Cadillac. First, though, an update on world and national news. For that, we go to Washington, D.C. with Nancy Lyons. Hey, Nance.
Thanks, Tim. The House committee investigating the January 6th insurrection honed in today on the pressure campaign applied by then-President Trump on various state elections officials. Bloomberg's Irv Chapman says Georgia was among the states that were targeted by Trump.
Georgia Secretary of State Brett Raffensperger got a phone call from Trump.
There were in suitcases 18,000 ballots, all for Biden.
Trump ended the call with a request.
I just want to find 11,780 votes.
Raffensperger testified.
We had many allegations.
Death threats, leading his chief operations officer to warn publicly that someone could get killed. In Washington, Irv Chapman, Bloomberg Radio.
New facts are coming to light in the Uvalde shooting at Robb Elementary School. During a Texas State Senate hearing today, Stephen McCraw, the Texas Director of Public Safety, says there's compelling evidence pointing to the fact commanders put the lives of officers before the lives of children.
The officers had weapons. The children had none. The officers had body armor. The children had none. The officers had training. The subject had none.
McGraw calls it an abject failure. Charitable giving in the U.S. reached a record $485 billion in 2021, though the increase did not keep pace with inflation. That's according to a Giving USA report today that says donations in 2021 were 4% higher than in 2020, but when adjusted for inflation, it was actually down 0.7%. Global news 24 hours a day, on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Nancy Lyons.
Thank you so much for that update, Nancy Lyons, Tim Stenovec, and Katie Greifeld. We're live in the Bloomberg Interactive Broker Studios in New York. Katie, Uber Pool, Lyft, I forget what Lyft's was called. Was it Lyft Pool too?
It's something similar.
And then Via was the car van sharing service.
Right.
All of this stuff during the pandemic, people didn't really want to be around people that they didn't necessarily know. But Uber is actually bringing back its carpool service after the pandemic paused. Does this mean the pandemic is over?
I don't know. People still getting COVID quite actively. But UberX Share, that's Uber's carpool service, now available in New York, Los Angeles, Chicago, Portland. That's going to expand to more cities over the summer.
Okay, it was suspended back in March of 2020. The company said the decision to bring it back will help passengers, quote, make a sustainable choice. Uber also acknowledged that shared rides are more affordable, especially in the current economic climate. So you do get a discount if you choose UberX up front and a 20% discount on the total fare if matched with another passenger. Oh, interesting. So you have to be matched with somebody in order to get that lower fare.
Yeah, I don't know. I have to admit, I've never used this service.
I was really into it before the pandemic. Yeah.
Well, I mean, I feel like you could probably like chat to a brick wall if you needed to.
Oh yeah, I definitely could.
Yeah.
I absolutely could. Thank you, I guess. I think. I don't know.
No, that's definitely a compliment. It's good for a journalist and like a radio anchor.
But people oftentimes wouldn't chat when they were in a car. At least here in New York. I know this stuff changes region by region. Via was a popular service before the pandemic. That was these shared vans. And all of these things offered this at a discount. And I guess the thinking here, Katie, is that if people are willing to ride the subway wearing masks next to other people, then perhaps they're at this point ready to share a car with somebody.
I don't know. Sharing a car, it feels a lot more intimate than sharing a subway car.
You have not been on the subway in a long time, I'm guessing.
I rode
There are some intimate moments on the subway.
Morning. Yeah, but no one wants to talk to you.
Oh, that's true. Yeah.
Unless they want money.
No, some people do want to talk to you, and that's the problem. All right, much more on this and more when it comes to transportation. Continuing our chat with Cadillac after the break.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
From Bloomberg World Headquarters, I'm Charlie Pellet. A Tuesday rebound for the U.S. stock market after last week's rout that wiped out nearly $2 trillion from the S&P 500 index. Energy and consumer discretionary shares led the way higher today, with the S&P up 90 points, up 2.5%. The Dow up 641, closing close to session highs, up 2.1%. NASDAQ up 271 points, up 2.5%. 10-year down 13.30 seconds. 10-year yield 3.27%. Spot gold down $6 the ounce to $18.32, down 0.3. Bitcoin up 1.9%, 20,816 on Bitcoin. And West Texas Intermediate crude oil up 1% today, 110.65 a barrel. Recapping the Dow, the S&P, and NASDAQ all rebound, with the S&P up 90, up 2.5%. I'm Charlie Pellet. That is a Bloomberg Business Flash.
Thank you so much for that update, Charlie Pellet. I want to get right back to our guest, Rory Harvey, Global Vice President at Cadillac. He joins us on the phone from Park City, Utah. Rory, before we went to the break, you were talking about the demand. You saw 250,000 hand raises. Does that mean, that doesn't mean deposits, right? That means expressions of interest?
No. Yeah, exactly. So, these are people that have said, as details become more available, we'd like to be kept in contact with you. We'd like to get the extra details, etc. And then, we opened the order bank up on May the 19th, and that was when we sold out the first model year.
Okay, I don't work for a global car manufacturer. I don't work for a global car brand, so I could be wrong here, but it does seem like you guys are leaving money on the table here with this type of interest, that it's sold out within 4 hours, one version selling out within 10 minutes. You can't get it till 2024. I mean, what went wrong in the planning of figuring out how much people would want this thing?
So a couple of comments, really. I guess, firstly, just it'll be 23 model year that is sold out at the moment. So the 24 model year will actually start during Q1 of next year. So if you were to place an order today, that's a
great clarification. Thank you.
So you will be able to get a vehicle probably sometime in Q2 of next year. So
that's about a year from now.
Yeah, exactly. So that sort of puts in balance a little bit in terms of the pricing. Obviously, we do look at pricing in terms of the debut edition. We wanted to go out there with our best foot forward. We put a very attractive special price out there, just under $60,000. And in terms of the vehicles that are on sale now, it's just under $63,000 for the rear-wheel drive and $65,000 for the all-wheel drive. So, as always, we will look at the competitive set, but we wanted to really get a grip in the market. We think that we've got a superb product, and we want to get as many customers enjoying that product as possible.
Do you anticipate having to delay that delivery target at this point?
Not really. It's one of those ones. I hesitate a little bit because there is still uncertainty out there in terms of supply chain. I think, I just heard some of the show talking about COVID. There are still challenges in terms of semiconductors. I would say that the industry is stabilizing overall from some of the speed bumps that have come up in the last couple of years. But at the moment, we've got a high degree of confidence. The next big test for us is August, where we really ramp up the production capacity of the Lyriq. But at the moment, I would say that we're confident in our ability to be able to deliver in line with the estimates that we've given to customers.
How do you ramp up production when supply chains are just snarled around the world? It's not just components that are going into these things. It's the raw materials that are going into batteries. Give me an idea, Rory, how GM is handling that and how Cadillac is handling that.
Yeah, so, we have a task force that's in place that meets multiple times, not just every week, but every day. We go to different suppliers. We look at second-tier suppliers. We go direct to some of the second-tier suppliers. We look at securing materials, securing components on a long-term basis. There's a whole stream of work that goes on in terms of doing that. And at the moment, I would say that we're in a much better position as a company than we were during the course of last year, indeed, as most OEMs were during the course of last year. And I would say the first couple of months of this year have really started to stabilize, but there is still pent-up demand from COVID, from semiconductors, etc. So at the moment, there's still more demand than there is supply of product, which means that there's strong pricing in the marketplace and relatively low incentives from manufacturers.
What, Rory, is the biggest bottleneck here? If you were to say there's one component or one raw material that's just giving you the most trouble, what is it?
Yeah, I'm not sure that there is. I think, the thing that we've got is we've got, demand that is just absolutely massive. And, we're really positive and really pleased in terms of that. So, we're just looking now continuously as to how we can pull the levers to be able to execute increased manufacturing capabilities and supply chain capabilities to be able to meet that demand.
Well, let me ask the question a different way. If there's one lever you could magically wave a magic wand to pull right now, which one would it be?
It would probably be supply chain in terms of it, but it's a difficult one to say because we've certainly got the ability to be able to deliver versus our business plan, and indeed we're increasing our supply over and above our business plan. So from that point of view, I would say it's still positive, but there are we could always build more and we could always sell more.
Rory, I would love to hear your thoughts on the competition because when you think EV, most people in the U.S. would think Tesla. And if you think about the target there, how do you surpass Tesla?
Yeah, it's a great question, and lots of people ask the question in terms of Tesla. I guess from my perspective, I'm just really focused in terms of what we can do as Cadillac. We've got some distinct advantages, I believe. We've got a dealer network out there that can provide after-sales coverage, that can provide support in the aftermarket. We've got a great coverage of dealers. Indeed, if you looked at GM overall, I think that 90% of customers can get to a dealer within 10 minutes. So we think that with our product knowledge, with our history, with our pedigree, with our customer care ethos, with our footprint of distribution, that we can have a competitive advantage there.
Rory, does it concern you at all if a customer's on a waiting list for an EV that they're going to say, I'm not willing to wait a year for this. I want something sooner. I need something sooner, and they go to a competitor?
Yeah, I mean, it's a good question. We haven't seen that in terms of the debut edition, as an example, in terms of people saying that, the time is too long to wait. Indeed, if you looked at many OEMs at the moment, as an example, if a customer orders a high-demand vehicle, there's going to be an extended lead time for customers to be able to get that vehicle. So, yes, it does concern me. But at the moment, I don't see it fundamentally as a big issue.
I am curious, sort of the word of the day, the word of the week, the word of really this year, it seems to be recession. And everyone is talking about when is the recession going to come? Is it inevitable? I'm curious, when you think about the person who might be buying EVs from Cadillac, do you think that a recession would undercut some of that demand that you've already seen?
Yeah, I think, it depends on the recession and the extent of a recession as to what impact it has in the marketplace. If you looked at it at the moment, the luxury segment of the marketplace continues to increase. If you looked at the pent-up demand that is there, it's very much focused across the industry, but even more so in terms of luxury. So I think that we've got enough demand to be able to continue to have very strong sales performance for an extended period of time. But there's no doubt that if there is a recession, dependent upon the extent, that it will have an impact on the market.
Rory, give us an idea of what you're doing, what Cadillac is doing, what GM is doing behind the scenes right now in order to have that portfolio of Cadillac vehicles be all electric by 2030.
Yeah, so, if you looked at it, we've now launched our last ICE vehicle. Literally, if you go back a few weeks now, we announced the Cadillac Escalade V. I guess it was a derivative within the Escalade family. But from this point forward, every vehicle that we will launch will be an EV. We literally teased last week or the week before Celestiq, which will be an ultra-luxury vehicle, as an example. So we put a few schematics of that vehicle out there in the marketplace, and we're looking forward to breaking some news on that in the sort of July, August, September timescale. So everything really is focused on EVs from a Cadillac perspective now and into the future.
And those are fully EVs, not hybrids, right?
These are full EVs, and we have the GM proprietary Ultium battery system, which again, from my point of view, is a big advantage because it means that the vehicles are designed with the battery in mind and the battery the same. So it's not that we're looking to convert ICE vehicles and fit the batteries into those ICE vehicles. So I think again that gives us a competitive edge.
Rory Harvey, Global Vice President at Cadillac, joining us on the phone from Park City, Utah, on this Tuesday afternoon. Really appreciate you taking the time, Rory. Well, that is going to do it for this Tuesday edition of Bloomberg Business Week. For Katie Greifeld, I'm Tim Stenevec, and on behalf of the entire team here at Bloomberg Business Week, have a great afternoon.